It looks like crypto is in no man's land. There was so much excitement just a few weeks ago. Now we can't hit any new all-time highs. Why is that? Who's buying and who's selling here? Let's have a look at the data most people are not considering. Have a look at the cost distribution heat map for Bitcoin. This shows the on-chain trading volume of BTC relative to the price. So it gives us an idea where's potentially a support or resistance, where's potentially a psychological anchor point in the market. And we have been trading quite actively at around 105k. Then we got our quick all-time high rally at the beginning of July. And now we are in this no man's land. The charts here are from Glassnode, from the Glassnode's Insight newsletter. Glassnode calls this the air gap. So there was quite a bit of accumulation below 110k and above 118k, but not much at the current prices. What's specific for crypto is that it's very hard to estimate what's a fair value, because say for the stock market, we've got the future earnings of the company, right? We can estimate what will be the future dividends that the company might pay. Or let's say we've got property, we can also estimate what kind of future rental incomes can we expect. But for Bitcoin, there is no active inflow of capital. Thus, we have to look at different measuring stick. I think one of the best measuring sticks is psychological anchor points, right? Let's say Bitcoin falls after a purchase. Then most people just consider, should I potentially buy more of Bitcoin or should I just hold it? Very few people are going to sell Bitcoin at a loss, because long term it's tend to appreciate, because long term there's less and less supply, at least relative to fiat currency. So long term we should expect, at least measured in US dollars, that Bitcoin appreciates. When we are at a loss, we just continue holding or buy more. However, when we are in profit, we might consider realizing some of that profit, right? We might consider taking that profit and use this for consumption or use this to allocate towards other asset classes. So looking at the relative anchor point, where is currently the market at, is very useful to figure out what could be future selling pressure or buying pressure. Have a look at this. This is the short-term holder cost basis. Now the realized price or the average cost basis of the short-term holders is the blue line. When the short-term holders are in losses, they might consider doubling down and buy the dip. When the short-term holders are in profit, they might consider taking some of that profit. Currently, the short-term holders are slightly in profit. The market isn't as heated as it was just a few days back, but it does take quite a bit of a dip to get a real support again. It will be at roughly 92k. But really what matters in this market is what is Wall Street doing, because a small retail investor in aggregate doesn't move that many funds anymore. The problem is that most people look at this data in too close detail. They're zooming in too much. This is the daily US spot ETF net flows. Sometimes it's going up, sometimes it's going down. It seems like there's no clear trend, but really there is a clear trend. Over the last month, if we annualize the demand of the Bitcoin ETFs over the last month, we get to an annual supply absorption of 3.6%. So 3.6% of the entire Bitcoin supply gets bought up every single year through the ETF alone. And have a look at the balance over time. How many BTC are held by the ETFs? Yes, it's not always going up. Sometimes we forgot our phases where it's just going sideways. But net, this trend is very clear. There's more and more BTC that moves into the instruments of traditional finance. This is a long-term demand that's supporting the price. For Ethereum, we've got a similar trend. Here, the supply absorption is even larger at 5.4%. It is more volatile though as well. In the last few weeks, it went up massively and the balance is going up. But here the history is also shorter. The question is, how much faster is this going to go up in the next weeks and months? So far, everything looks good. And so clearly, even from an ETF perspective, Ethereum is a bit more risky than Bitcoin. Bitcoin just sees long-term accumulation. Ethereum sees accumulation as well, but it is more volatile. Sometimes you go flat, sometimes you go steeply up. Currently, we are going up, and so Ethereum is outperforming everything else. So really, it's Wall Street that's now determining where the prices are going, especially for Bitcoin and Ethereum. And then the question is, what's going to happen once a Solana ETF in America gets approved? Now, why are we in no man's land though? When there's all this demand by Wall Street, why is Bitcoin going down sometimes like this? The answer is that still 90% of Bitcoin is not held by the treasury companies or by the ETFs. 90% is still in long-term holders' hands and they sometimes take profit. Just have a look at the long-term holder supply change. So this is in blue. They tend to sell when Bitcoin's price is high. They tend to buy when Bitcoin's price is low. And they did sell in the last few days. And just have a look at how this compares to the ETF flows, right? They can outsell the ETF flows quite a bit in the short term. So it's that long-term holder supply change that causes the volatility and those 25 or even 30% drops in the Bitcoin price, despite the long-term accumulation by Wall Street. But even short-term, I am pretty bullish. What we see over here is the stablecoin dominance. How much of the entire crypto ecosystem is currently in stablecoins? When this percent is very, very high, it means that many people are cautious, that there's a lot of dry powder on the sidelines that's ready to be deployed. So crypto prices tend to be low. There's a lot of money on the sides. When the stablecoin dominance is low though, it means the exact opposite, right? The market is heated and crypto prices are high. So have a look at this. At the bottom, we see the Bitcoin price. At the top, we see the stablecoin dominance. When crypto prices are low, the stablecoin dominance is high. When crypto prices are high, the stablecoin dominance is low. And this tends to now trade in a range in the last 1.5 years. So it makes sense to take profit when the stablecoin dominance is low and to buy when the stablecoin dominance is high. It tended to trade between 5% and 9%. And it seems like still right now, the market continues to heat up. The stablecoin dominance is going down. Crypto prices might go higher. But then once we hit the 5%, it might make sense to take some profit. Some long-term holders already took some profit, right? That's why we didn't see that much of an increase in Bitcoin anymore. But they didn't take profit to the same degree as they did when Bitcoin hit the 100K or the 73K. And that's likely going to happen once the stablecoin dominance hits 5%. That's also when I'm going to take more profit. Really, I think the best medium-term indicator to time where Bitcoin and crypto as a whole is going is still the 120-day simple moving average. So I've run a back test. I tried to figure out what's the best moving average. Is it the 30-day or the 100-day or the 200-day? And when we run the numbers, the 120-day is the best across the board, across many time frames. So the idea is that we should be long, that we should be betting on rising prices whenever the Bitcoin price is above the line in turquoise here, and that we should be short or be in cash whenever the Bitcoin price is below the 120-day SMA. And currently we are above, and so still we should be betting on rising prices, which of course in the grand scheme of things still makes a lot of sense, right? Money is flowing in, there's Wall Street demand, and even the stable coins haven't yet been fully deployed. But let me show you how well this approach works. This is the backtested result. So on the x-axis, we see the moving average duration. It goes from 2 days all the way to 200 days. And on the y-axis, we see the annualized performance. So the geometric average over the testing period. Buying and holding is this black reference line. So if we take short moving averages, they tend to not work that well. But when we take longer moving averages above 30 days, it tends to outperform just buying and holding. Unless we get too long in the moving average, then we just get the buying and holding return. But in general, the 120-day SMA works much, much better than buying and holding. Again, this is annualized. This is compounding over time. So when we look at the comparison, right, just buying and holding Bitcoin, that's the white line over here versus the line in turquoise. We see how much faster timing the trend compounds capital. And I just like this kind of chart. I just like how constantly this is doing better. And that's why it's my North Star to time the market. It's not perfect, right? We do get our failed signals. Sometimes we go above and below the moving average regularly. And so we don't really know what's going on here. But I regard this kind of a market phase much more as no man's land than the current market phase. Overall, we are still bullish. Yes, the reference price isn't really clear, but money is flowing in and we are above the 120-day SMA. So as per tendency, we should definitely bet on rising prices. I personally, of course, like to use relative valuation bets as well, right? Because capital is now concentrating towards the main players. Bitcoin, Ethereum and Solana. The small altcoins tend to rather break away because again, it's Wall Street that's pumping in all the capital. But that's my personal approach. It's a bit more complex, but I do think also that it has the best risk to reward. If we just bet in a single direction, I think it's still up from here. I'm not always bullish, of course. Many other channels are. Many other channels always say it's going up, but feel free to check out those other channels. I think not enough people do this. Feel free to check out what did they actually say over here, right? Let's say the beginning of 2022, were those other channels bullish or bearish? And then feel free to check out the videos on this channel at the time. You always want to do your due diligence, right? Not everybody is correct all the time, but if in general they are on the right side of history, especially during the bearish times, that should give a first useful impression. Now here's the problem with the crypto space. Everybody talks about the next 10 or 100x returns with the next small meme coin, but the issue is if you bought any of those assets that are recommended in those videos, you very likely lost money. And that's simply because returns are concentrated in just a few winners. The vast majority of altcoins loses all the time. And this is all just preying on your emotions, preying on your greed. I'm trying to go a different route with this channel. I'm trying to figure out what are strategies that long-term make money, where we don't just pick the needle in the haystack, but where actually statistics are in our favor. You might have seen my analysis on moving averages, right? How the best simple moving average for Bitcoin is the 120-day. So we should buy Bitcoin whenever the price is above the 120-day SMA, and we should potentially sell it when it's below. So that's this line over here, the line in turquoise. I've been talking about this regularly on this channel, and it helped me very well to time the market, to be out when there's potentially a correction, and to be heavily invested whenever we are in a bull run. And so we get those back-tested results, but that's a problem, right? It's a back test. It's a simulation of how well did this thing work in the past, but there's not necessarily a guarantee that it works in the future as well. And then there are those other counterintuitive approaches, right? Where we don't try to buy the one altcoin that outperforms, but we rather bet on altcoins doing worse because of all of the expanding supply. I talk about this all the time on this channel as well. So for example here, right, this is Balancer, which had a very extensive supply expansion, and that then leads to Balancer going down over time. And then we also talk about how can we potentially reduce the risk that we don't get stopped out during those temporary rallies of 100%. And then we talk about potential relative valuation trades, right? Balancer relative to Ethereum, for example, underperforms more consistently, so we can bet on that going down long term. I made money with this regularly. And so this is then where it gets from simulation to actual performance. I personally have made money with relative valuation bets for a long time now. Almost 4 years, it's 46 months. And had I just dollar cost averaged into Bitcoin, I would have gotten this light gray line here as return. But because I also bet on very poorly performing altcoins to do worse than Bitcoin, I got the performance here in black. And so we don't just have a simulation, we also have actual returns. But again, that's just me, and that's not showing it live. And so I went one step further. I opened up a portfolio of 2.5 months of relative valuation bets, where I showed the members of this channel, what do I bet on? Where do I go long? Where do I go short? And over 2.5 months, that portfolio made 50%. So I started with roughly 40K and then ended up with roughly 60K. But then again, it's just myself again sharing my performance, sharing my trading. It doesn't necessarily mean that you can achieve the same as well. I'm trying to be much more transparent than all of those other YouTubers. I try to share strategies that genuinely work. I'm not pumping and dumping based on any money that I got from any crypto project. I never take any money from any crypto project, but still this is just myself trading. And so this is then 3 weeks ago where I went one step further, where I changed something, where I said, okay, I'm ready to take money into a capital pool. I execute the trades, and then you get the exact same performance that I get. All the negatives, all the positives. And over the time, we are already in profit. We are now at 4.7% in profit. I started out with my own money with 100K, and various members also deposited quite a bit of capital. And so I was wondering, how can I provide most value? For the people that have a lot of time, but not yet that much capital, they should be able to learn those strategies, those relative valuation bets relatively quickly. They should be able to make money very fast. And that's what all those tutorial videos are for, right? There's a lot of tutorial videos in premium. Feel free to just binge watch all of this. There are two main videos that are absolutely essential. So that's using perpetual futures on hyperliquid to bet on relative valuations. And it's this one over here, risk management with relative valuation bets. Because if you don't manage your risk, then using perpetual futures is a bad idea. So when you've got some time, but you don't have that much capital yet, then the monthly membership for 125 is for you. That's just for you to learn all the different steps. I share my own trades as well. You can copy trade me. I will also share my favorite trade with you. So in case that favorite trade will not make money in the next month, then I will also refund you the $125 per month. So it's basically risk-free for you to enter this membership. But in case you don't have time to do the copy trading, in case you don't want to watch the tutorial, then you should probably go with yearly, because over here you get access to the automated copy trading, where we are so far in profit with 4.7%. And while I cannot guarantee that this will continue to stay a profitable strategy, I feel quite confident executing this for the members. Again, because I have very positive experience with that for the last 4 years. And it's not just because of random bets, because I got lucky with a small meme coin that 100x'd. It's because we use the market structure to our advantage, right? When the early investors and the team cash out, when they dump the price because the supply is expanding, then we make money at the same time. We basically flip a chart like this, so that it looks like this. This is the kind of performance we are looking for. And so for the annual members, there is the copy trading mechanism. You just have to watch a single video, 18 minutes in length. It shows how to send the money to that pool. The average deposit is around $13,000. So if you only have a few $100, then the annual membership is probably not for you if you just do this for the copy trading. But if you've got 5,000, 10,000, potentially more to deploy into a risk-on strategy, then feel free to check it out. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!